We're calling it. The semiconductor sector's fear-driven sell-off has created a buying opportunity that's as clear as a 5-nanometer die size. Today, the lab is dissecting the daily close of SOXX, which gained 1%, and SMH, which trailed with a 0.4% increase, while the leveraged SOXL surged 2.8%. For SOXX, our lab score indicates a verdict of accumulate due to its diversified portfolio of semiconductor stocks, which are poised to benefit from the ongoing demand for AI and 5G technologies. SMH, on the other hand, receives a hold verdict from the lab, as its higher exposure to memory chip makers may weigh on its performance in the short term. Meanwhile, SOXL's impressive gain earns it a buy verdict, but we caution that its 3x leverage also amplifies potential losses. In the next 10 minutes, we'll dive into the hardware teardown of these ETFs, examine the macro forces driving their performance, and analyze insider signals to deliver the lab's final verdict, so buckle up. The iShares Semiconductor ETF, SOXX, advanced 1.02% today to $405.95, driven by a structural re-rating of AI infrastructure demand. This isn't just a broad tech rally. It's a targeted capital allocation into the enabling layer of the AI economy. Leading this charge within SOXX, we see NVIDIA, though flat today, its foundational GPU architecture dictates the performance ceiling for AI compute. Broadcom, another top holding, is actively expanding its secure agent platform, directly targeting the enterprise AI boom. This is a critical, high-margin software layer on top of hardware. Micron, while also flat, holds a significant position in high-bandwidth memory, or HBM, which is indispensable for accelerating AI workloads. The lab views these as more than just components. They are the strategic choke points of the AI build-out. The collective exposure to these high. At the lab, we examine the iShares Semiconductor ETF, or SOXX, with a critical eye. The fund's AUM and expense ratio are not disclosed, but we can assess its performance and holdings. With top holdings like NVDA, AVGO, MU, AMD, and Applied Materials, each at 0%, it's clear the composition doesn't capture the sector's growth drivers, given their weights are effectively zero. The concentration of the top 5 holdings at 0% of the fund raises questions about the diversification claim. The fund's YTD return of 931.9% far outpaces its 3-year average of 42.8%, suggesting a mismatch between stated strategy and actual performance. We're examining the iShares Semiconductor ETF, or SOXX, through the lens of technical and macro analysis. The RSI at 83.5, coupled with the MA20 and MA50 converging at $405.95, signals an overbought condition, indicating bearish momentum may be emerging. This technical setup suggests a potential reversal in the near term. From a macro perspective, the current narrative surrounding trade uncertainty and tariff fallout is casting a shadow over the technology sector, including semiconductors. However, the lab disagrees with the notion that this uncertainty will have a lasting impact on SOX's growth trajectory, given its YTD performance of over 93%. We believe the sector's fundamentals remain strong in the recent macro headlines. At the lab, we see one key structural reason to hold the iShares Semiconductor ETF, or SOXX, and that's the ongoing shift to 5G technology, which drives demand for its components. This macro tailwind is a significant growth driver for the sector. However, with an AI ETF score of 54 out of 100, we're cautious about the overall outlook. The current technicals, with an RSI of 83.5 and bearish MACD momentum, suggest a potential pullback. Our final verdict is that investors should watch the $385.65 support level closely, as a break below this could signal further downside. Given the uncertainty and the concentration risk, albeit reasonable diversification, we're monitoring the ETFs. We're seeing a 0.4% move in VanEck Semiconductor ETF, or SMH, today, driven by the ongoing AI boom. The structural force behind this move is the surging demand for high-performance computing, particularly GPUs. Looking at the top holdings, NVIDIA is driving the move due to its strong earnings cycle, with a significant beat in its latest quarterly report. TSM is also contributing, with its 5-nanometer chip technology gaining traction. Meanwhile, Broadcom is benefiting from its diversified portfolio of analog and embedded processing products. The combined exposure to these leaders means SMH's risk profile is tilted towards the high-growth, high-volatility end of the semiconductor spectrum, with a significant reliance on the continued. At the lab, we examine the VanEck Semiconductor ETF, or SMH, with a critical eye. The fund's AUM and expense ratio are not provided, so we cannot directly assess whether the fee is justified by its return record. The top 5 holdings, including NVDA, TSM, AVGO, ASML, and AMD, all have 0% allocation, which is unusual and suggests a potential issue with the data. The concentration of the top 5 holdings at 0% raises questions about the fund's diversification claim. With a YTD return of 642.3% and a 3-year average return of 53.9%, performance seems strong, but the stated strategy is unclear. Given the unusual holdings composition, at the lab, we're analyzing the VanEck Semiconductor ETF, or SMH, through a technical and narrative lens. The RSI at 83.4, coupled with the MA20 and MA50 at $454.80, signals overbought conditions and potential bearish momentum, as indicated by the MACD. This technical setup suggests a near-term pullback is possible. Meanwhile, the macro narrative is dominated by trade war uncertainties, with headlines highlighting lingering effects of Trump tariffs and fears of renewed trade tensions. However, the lab disagrees with the notion that this macro environment is entirely bearish for SMH. We believe the semiconductor sector's growth drivers, such as chip demand and government spending on initiatives like the CHIPS Act, will. We at the lab see a bull case for VanEck Semiconductor ETF, driven by the growing demand for artificial intelligence and 5G technology, which is a significant product cycle tailwind. The CHIPS Act is also providing incentives for domestic semiconductor production, further supporting SMH. However, with an AI ETF score of 58 out of 100, we remain cautious. The technical indicators, such as an RSI of 83.4 and bearish MACD momentum, suggest a potential pullback. Our final verdict is to watch the $432.06 support level, as a break below this could indicate a larger correction. Conversely, a bounce off this support could be a buying opportunity, particularly if the CNN Fear and Greed Index remains in extreme. We're seeing a significant move in the Direxion Semi-Bull 3X ETF, SOXL, up 2.8% today to $88.37, driven by the bullish alignment of its short-term trend indicators. The structural force behind this move is the ongoing strength in the semiconductor sector, fueled by robust CapEx investments. Looking at the top holdings, NVIDIA is driving the move due to its strong earnings cycle. Broadcom is benefiting from its diversified product portfolio, and MU is gaining from its exposure to the growing memory chip market. The combined exposure to these industry leaders means SOXL's risk profile is heavily tied to the performance of these key players, with their collective strength contributing to the ETF's impressive 1,458.9. At the lab, we examine the Direxion Semi-Bull 3X ETF, or SOXL, and notice its AUM and expense ratio are not provided, making it challenging to assess the fee justification. The top 5 holdings, including NVDA, AVGO, MU, AMD, and Applied Materials, have a 0% weight, which is unusual and doesn't capture the sector opportunity. This composition raises questions about the fund's ability to track the semiconductor sector. With a concentration of 0% in the top 5 holdings, the diversification claim seems more like marketing spin. The fund's YTD return of plus 1,458.9% significantly outpaces its 3-year average of plus 77.9. We're looking at the Direxion Semi-Bull 3X ETF, or SOXL, and the technical setup is signaling a momentum direction. With an RSI of 85.1 and the MA20 and MA50 at $88.37, we see a potential overbought condition, which could indicate a reversal in momentum. The current macro narrative, dominated by Trump tariff fallout and trade war fears, is telling investors that the semiconductor sector is under pressure. However, the lab disagrees, as the sector's fundamentals remain strong. We believe the narrative is overstating the impact of trade tensions on SOXL's holdings, which have shown remarkable resilience. The lab's position is that SOXL's YTD performance of plus 1,458.9. We at the lab believe the bull case for Direxion Semi-Bull 3X ETF, or SOXL, is driven by the growth in artificial intelligence and autonomous vehicles, with companies like NVIDIA and AMD leading the charge. This product cycle is a significant macro tailwind for SOXL. However, we must consider the concentration risk and the current technical indicators, such as the RSI of 85.1 and bearish MACD momentum. With an AI ETF score of 54 out of 100, we conclude that SOXL is a high-risk, high-reward play. Our final verdict is to watch the $83.95 support level, as a break below this could indicate a downturn in the global economy, impacting tech spending and demand. Semiconductor sector holds steady today. Please like, subscribe, and comment which stock to analyze next. Remember, our content is educational, not financial advice, so do your own research, as past performance doesn't guarantee future results. We're here to learn together at the lab. Thanks for watching.